Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is Joe Mazumdar, editor of Exploration Insights. Joe, welcome back to Kitco.
Great, thanks, Paul.
We have a lot to get through today. And we're going to start with an unjust and sweeping generalization about trouble in Africa. Barrick Mining said that the Malian government's attempt to seize control of its Loulo-Gounkoto gold mine is without precedent or lawful justification. The Malian government earlier requested the court to impose provisional administration over the mine. A ruling is expected in the first week of June. Barrick owns 80% of the mining complex, with the remainder held by the Malian government. Barrick says the government has disregarded its rights. It has unlawfully detained several Barrick employees for over 5 months and continues to block gold exports from the complex, which forced Barrick to suspend operations. Barrick announced today that it has now asked the World Bank ICSID arbitration court to intervene. Joe, both sides seem to be playing hardball here. What do you think the end game possibly is?
Well, I guess the hardball emanates from the fact that this project for Barrick is significant. I mean, in terms of their group production last year, it was about 15%. And in terms of their all-in sustaining costs, this is a project that's actually lower than their average group all-in sustaining cost, which was about $1,480, $1,490. And this one was in $1,300, around $1,300, $1,310. And they produced about 3.9 million ounces attributable last year. And this thing was, not attributable, but around 580,000 ounces on a 100% basis. So Barrick obviously would love to keep this project going. Barrick's argument is that they've been operating in that country for 30 years as Randgold, more so than as Barrick. And they were under the impression that the new mining code would more impact projects going forward and not be applied retroactively. The retroactive impact, therefore, impacts companies that have been there longer more so than the companies that have been there for less time or are looking to build a project now. And what they would say, which I think is right, is that has been a significant contributor to the economy, 10 to 15% of its GDP, depending on the year. And it employs a lot of people locally. So to keep the operation going is important, not only for Barrick, but for the country. The country is arguing that they have to pay the retroactive fees on the taxes and that. And if not, they will take the project over, which right now they have banned exports of gold from there. They've seized the stockpiles and they have arrested several employees that have been in jail for about 5 months. So it's not a good situation. The arbitrage may work out, probably will work out in Barrick's favor, but it's not going to replace an asset of that magnitude.
Now, Joe, Barrick has criticized other gold mining companies that operate in Mali for agreeing to new terms with the government. Is there a danger that this escalates too far? And given the importance of the mine to Barrick's overall performance, will there be shareholder pressure for Barrick to settle and just reach an agreement, whatever that agreement may be?
I don't know if there's going to be all that much shareholder pressure because Barrick operates in a lot of these high-risk jurisdictions, and if they probably give too much, then maybe other countries will expect them to do the same in other high-risk jurisdictions. So they really have to make a stand. Given their share price performance and the fact that really in their 2025 guidance does not include Lulu in their production profile. So they're already going under the impression that it's not going to happen, and they're not going to take the project back. So the upside is that they get it back.
Now, Barrick's asked the World Bank ICSID to intervene, but my understanding is that whatever ICSID says, it's non-binding, and so it's not necessarily going to move Mali's government one way or the other.
Yeah, I mean, the thing is, even if it is technically binding, they won't care. They basically seceded from ECOWAS and they've formed their own little group with the acronym AS, I believe. Technically, you could say that the Malayan government could not actually operate this mine, but now with their links to the Russians, I mean, the Russians also, obviously are producers of gold in various countries, including Africa, West Africa. So technically, they might get help from the Russians to actually operate that mine. The risk that they can't take it over and actually make money off of it is probably a lot lower now, given their involvement with the Russians.
Okay, and for the record, from my understanding, is the Malian government believe this is an internal taxation matter and therefore not one that's suitable for international arbitration efforts. Switching countries to the Democratic Republic of Congo, Ivanhoe Mines pulled underground workers and equipment out of its Kakula underground mine for safety reasons this past week due to ongoing seismic activity. It's also pulled its guidance for the operation. Joe, how common is it for mines to experience seismic activity? Is this an anomaly or not?
It's not an anomaly as mines get deeper, below a kilometer. There's been lots of seismic activity in mines, deep underground mines in South Africa, in Canada, even some in Chile. So basically what you're doing is it's sort of like you're displacing an area. So if you had a pond of water and you threw a rock in, that the water is accommodating the impact of the rock. In this case, you're taking the rock away, and then the stresses are accommodating that gap in the rock, and it gets worse as you get deeper. And depending on the mining method and how much you basically backfill, which sometimes is not an option, those stresses, fracturing, the type of rock, and also they carry a lot of water. Some of these sandstones that they have, all of that could conspire to give you these kind of conditions that generate fractures and generate seismic activity. Their big issue is not only the seismic activity, is the impact of the seismic activity on their pumping. So because there's a lot of water underground, they're constantly pumping. And the fact that the pumps got taken out underground, I think in the eastern part of Kakula underground, that's basically flooded some levels. And so now they're basically putting in pumps, but from the surface. So that way, if they do have seismic activity again, those pumps won't get taken out and they can maintain activity underground. Right now, it'll be probably a couple of weeks before they basically get that underground going. They have stockpile material that they could keep feeding their plant that could make up for the time that they're not operating. They do have the ability to keep producing in this time where the mine goes down.
Now, there's many deep mines around the world. I'm thinking of sort of gold mines in the Abitibi. You mentioned Chile and Peru. There's some very deep copper mines there. But we don't really hear of such stoppages very, very frequently there. Is there a possibility that there's perhaps a design issue here? Because Kakula is a relatively recent mine, isn't it?
Yeah. I mean, it might be the stoppage is linked to the pumping more so than the seismic activity. Seismic activity is not uncommon in Sudbury. It's not uncommon in the Red Lake area, Young-Davidson, El Teniente, Chuquicamata Underground. You do have these incidents. They don't always make the paper because they don't always impact production. This one is impacting production. Mined production, but potentially not output, because they'll have stockpile material that they could process. But yeah, this is not uncommon. The impact is probably less common that it has such a big impact, and it's really I think that impact is more related to the seismic activity impacting the pumping.
Okay, well, it sounds like if that's the case, then Joe, then that's something that's resolvable, and hopefully the mine will they'll be able to get the mine back online very soon.
Yeah. I think this will probably be something that'll take a few weeks, but again, probably more around pumping than anything, and obviously safety.
Okay, well, let's turn to a big financing this week, and that in the form of Franco-Nevada, which bought a 7.5% royalty on the Cote gold mine, IAMGOLD's Côté gold mine in Ontario. Franco-Nevada has agreed to pay $1.1 billion US dollars for an existing royalty package there, which consists of a 7.5% gross margin royalty on the core Côté and Gosselin deposits, which cover all the project reserves and pretty much all of current resources, and also a 4.5 to 7.5% royalty on peripheral properties, including the near mine exploration targets. Côté began commercial production in August last year, and IAMGOLD has provided guidance for this year on a 100% basis for 360 to 400,000 ounces. Côté hosts measured and indicated resources of more than 16 million ounces, with another 4 million of inferred resources, and is due to produce an average of 500,000 ounces a year during the first 6 years of an 18-year mine life. Importantly for IAMGOLD and joint venture partner Sumitomo Metal Mining, Franco will also give them the option to buy back half of this royalty in 2 tranches within 3 years. Joe, it would seem to be a great buy for Franco, a royalty on another big long life mining asset, and also, of course, possibly for IAMGOLD and Sumitomo, given that they've got the option to buy back half of that royalty.
Yes, I mean, I think it's a good deal for Franco, but it's not a financing deal because all this money is going to the third party that owns the 7.5% gross margin royalty. I think this was a partnership between the companies, IAMGOLD, Sumitomo, and Franco, to actually close this deal. And the interest on the part of Sumitomo and IAMGOLD predominantly was that they can buy back half. And that's why they probably brought in somebody like Franco that has the cash to be able to do this transaction, because they probably had leverage with the owner in terms of actually opening up the idea of actually transacting that. And potentially the miners had the first right of refusal on it. And so they basically sold this first right of refusal to Franco, through the option of buying back half. And buying back half is a flexible rate depending on the internal rate of return of the mine plan for the 2 separate tranches.
Yeah, I mean, thanks for that additional detail there, Joe, because I would have said it's perhaps uncharacteristic of a royalty and streaming company to voluntarily give back part of a royalty to a company.
Yeah, it would have been nothing or that. That's basically what you get. But, they're basically funding it because they're paying upfront $1.1 billion. They'll get some of that money back through those 2 tranches. But in the end, they'll end up with half of the 7.5% gross margin royalty on a long life, open pit, granted low grade mine in a good jurisdiction in Northern Ontario. So that's all positive for Franco.
IAMGOLD and Sumitomo will have to pay at least $500 million to buy back half of that in the 2 tranches, about $250 million at least per each half of the tranche there. But it's not going
to be like each half isn't the same cost, because the first half is like the basic interest rate, SOFR plus 1.1%. The next one is a guarantee 10% IRR for Franco. The second one's more expensive than the first 25%.
Franco's pretty much got all of that money in cash on its balance sheet, and money begets money, I guess, is one of the things we can draw from this.
Yeah, I mean, they make about $275 to $300 million in free cash flow per quarter, and I think they have about $2 billion of capital available to do this transaction.
Yeah, and I imagine there's not that many big transactions out there in the pipeline. So getting what is paramount.
Yes, exactly. There's not too many of these. What they're looking for, these long-term sort of fat royalties, and that's why they tend to go for streams, because streams tend to be on longer-lived assets as a precious metal byproduct of, let's say, of a porphyry or a base metal mine. It's harder to get that in gold mines. Gold mines usually only last 5 to 8 years. So to get one that's got a potential mine life at 18 years in Canada is definitely something worth transacting.
And of course, as the biggest royalty company out there, they've probably got the lowest cost of capital and can outbid anybody else for these top deals.
Yeah, and it might have been the companies like IM Gold that they're in Toronto as well. That it's easier to transact. You just have to walk down to their office, and you already talk to them directly. You don't open it up for a bid. You're more interested as IM Gold to have that ability to buy back half, and what the cost of that half would be.
An interesting thing I saw on Franco's corporate presentation about this, they've obviously taken a very dominant position and a strategy of getting as many royalties or big royalties as it can in Ontario. It really is the only game in town. When you look at their portfolio, they basically own Ontario.
Yeah, I mean, given their foray into Panama, doing things like this in Canada and safer jurisdictions is probably something they want to have a record of doing to show, to make up for that incident in Panama.
Absolutely. Now, another company with a lot of cash on its balance sheet is Dundee Precious Metals, which, according to news reports, is contemplating the acquisition of Adriatic Metals. Dundee ended the first quarter. It's one of the lowest cost producers out there. It had $3.6 billion Canadian market cap. It finished the first quarter with about $800 million US dollars in cash and no debt on its balance sheet. Joe, Dundee is Dundee in a position of acquire or be acquired because of that cash position? And
that's probably a good thing, good way to look at it. But I think they have a sort of leaning towards Eastern Europe, metallurgically sometimes complicated sort of deposits, and that might not be for everybody. And it's more smaller assets, and they might they've run up quite a bit this year, and good for them. I mean, last I looked, they were up about 60 to 65% year to date. So they've been on a steady rise. And so to be able to acquire Adriatic in the same jurisdiction, I mean, in Eastern Europe as well, they're mostly in Serbia, Bulgaria, but this would be in Bosnia, so, not far. Polymetallic, and they deal with those kind of metallurgies as well. But they would also have the capital to expand, which is what Adriatic is proposing in terms of higher throughput. Dundee wouldn't have a problem ramping up maybe quicker than Adriatic is planning. So that would be good for potential shareholders in Adriatic, thinking that they get shares in Dundee, knowing that they could grow faster, with a lower cost of capital profile with Dundee. So yeah, I think that transaction probably makes sense. It's incremental, it's growth. And that this is what intermediates can do, because they don't have the insurmountable production profile that it's harder to find something that you acquire or grow it or organically, because they got that Coco Rakita skarn that they're also developing, that they've got that in PFS stage. This they bring in closer because that's permitted and closer to production.
Now, you mentioned the complementary nature of the geography of where the two companies' businesses are located, but at a corporate level, perhaps, this deal would also enable Dundee to grow and increase its market capitalization and get out of that very busy band of companies with a, let's say, circa 3 billion market cap and get into that more rarefied air towards 5 billion plus.
Yeah, I mean, growth is good. I mean, still with their geopolitical profile, they might not still be for everybody. So offering dividends and that is probably a good idea. But I mean, like I said, they've grown remarkably, not only in 2024, but also in 2025. They've had a history of meeting guidance, which gives them the premium that is justly deserved. On Adriatic, for its part, because it's developing this project, they were actually up to when the rumor came out and when the press release came out that Dundee was talking to Adriatic, they were actually down 7% year to date from December 30th to May 15th. And so most of their rise, a 39% hike in value, was all related to a potential takeout. Not to their individual performance.
Now, obviously, there's nothing official yet. There's no transaction. There's no deal on the table. There's no value on what Dundee may pay or not for Adriatic. But let's talk about premiums. I mean, what's your view of how premiums are developing in the current market?
Okay. Well, I would say that, though we don't know what's going to happen, whatever is going to happen has a specific date, because because they're listed in London. Dundee Adriatic's listed in London, that they have to come up with a yes no on this by June 17th. So that's probably a lot of the built up. A lot of these ARB guys are getting into this because there's a fixed timeline to this transaction, whether it happens or not. With respect to the premium, it all depends. I mean, it's a value proposition, and where you are in your development, whether you're producing or not. If you're a producing asset, the premiums will probably be higher than if you're a development asset. And depending if you got a permit or not, the premium might be different. And depending on how your share price has developed. If potentially Adriatic had done as well as Dundee going into the year, it might be harder to make this transaction. But since they haven't been, and they've actually been down, more of their shareholders will probably be positive on the acquisition and the ability to do it. And so you might not have to offer a big premium as you might have had to with a company that had outperformed.
Okay, a lot more to come there probably. Other M&A news this week is Harmony Gold Mining is to buy MAC or MAC Copper in a US $1 billion cash deal at a 20% premium. Joe, one thing that stands out here, another gold company buying into copper.
Yes. This mine's been around for a long time. This is the Cobar mine in New South Wales. It's not a big project, I mean, in terms of size of a mine, but it's very high grade. And it's been operating for a while. So in terms of the current commodity prices in that, this is a mine that generates a lot of free cash flow. And Harmony wants to develop two projects, the Wafi Gold Pool in Papua New Guinea, as well as the Ava Copper project in Queensland. And so this is a way of using their equity to buy free cash flow to fund their growth in their other assets, while adding, that free cash flow is more stable because it's not coming from South Africa or some other place. It's coming from Australia, so it's more stable, and so now they're using basically debt they're going to raise debt to make the purchase because it's all cash, and that's probably what Cobar wanted Mac Copper wanted, because they did probably most of their shareholders weren't interested in shares of Harmony because potentially of their exposure to South Africa. So they had to offer cash. But it's nice to see major banks like Citi, JP Morgan, and Macquarie offering them the debt to do this. I don't know the terms of the debt, so I don't know the cost of capital on that. But it's nice to see that banks are out there supporting the transaction. But again, it's more for debt early, generate the free cash flow, and use that free cash flow longer term. I mean, would they get the same debt terms if that development if that was raised to build Ava Copper and to build Wafi Gold Pool and PNG? I don't know. The cost of capital might be lower for them to make the acquisition because people can see the free cash flow coming in to pay them back, rather than building projects that may not come in time, may not be commercial in time. So most of what the banks are looking at is that free cash flow from the Peak mine that'll pay them back.
So it sounds like the principal thing here is related to sort of overall financing of the company's future and its growth, because it's very difficult to see any synergies at the asset level. The CSA mine is in New South Wales, as you mentioned. Harmony's nearest operation is in northern Queensland, and as you mentioned, development projects in Papua New Guinea and elsewhere. Is there anything else, any other synergies or any other benefits of Harmony buying Mac Copper, do you think?
Yeah, I would say that Harmony buying something in South Africa, even if it's synergistic, wouldn't be what they're trying to do strategically. They're trying probably to grow their asset portfolio, just like a lot of South African-based companies outside of South Africa. And so getting something in New South Wales makes sense to them. I mean, AngloGold Ashanti, for years, decades, have been growing their asset base outside of South Africa, in Western Australia, now with Silicon Merlin in Nevada. So that's all been positive, and AngloGold Ashanti has done well doing that. So Harmony's probably looking at that and saying, well, that's probably the way we want to go as well.
There's been a deluge of positive news recently from M&A target Perpetua Resources, including a critical permit under Section 404 of the Clean Water Act for its Stibnite development project in Idaho in the USA. The company's also submitted to obtain a $2 billion US loan from the US Export-Import Bank, and it's also received a $6.9 million in funding from the US Army to continue to investigate the ability to produce military-grade antimony trisulfide. And the White House recognition. US President Donald Trump put the Stibnite project on his list of projects to be developed. Joe, it seems that the company's been 8 years in permitting to become an overnight success.
Yeah, I think I first started visiting this project when it IPO'd back in maybe 2011, 2012. So yeah, it's been going for a while. They've put in a few feasibility studies. The problem for this mine is where it is in Idaho, the U.S. Forestry Service permitting, the fact you got to move a river that goes through a former open pit. And there was a lot of opposition to this project. The antimony byproduct is a boon for them with respect to getting the funding from Exmin. And their feasibility study, the last one was done pre-COVID or around COVID, January 2021. So the numbers are probably more 2020 and probably a lot more before COVID. And so most of the capital numbers from those pre-COVID capital projects are probably 35 to 50% higher. So their number was around 1.3 billion to build this project. I mean, I can easily see this being 1.7 to 1.9 billion. And so the fact that they can get access to $2 billion is great, provides them, the ability to go to the markets, for a significantly smaller quantum of equity to build the project. And probably Exmin won't require them, like some banks, to say, oh, you must raise at least 30% of that yourself. They're more interested in the antimony.
Now, the capex is higher than you've outlined there, Joe. I had the pleasure and privilege to speak to CEO John Cherry yesterday, and he said the number's probably around 2.2 billion US. Yeah,
that's even bigger. Yeah. So I was thinking 35 to 50, but that's more like 60 to 70%. But also probably I'm not sure how much companies are taking into account steel, aluminum tariffs, or anything like that. Most of the companies that I've talked to so far that are doing studies aren't including in that because they're not sure if it'll happen and they don't want to put a bigger number out. But somebody that's actually got to build it, they're probably absorbing some of this tariff talk.
Now, the company had been in the permitting process, the NEPA permitting process, for 8 years, and that was almost concluded before the project was added to Trump's White House list. But I suppose it's not a bad thing to give the president a relatively quick and easy victory.
Oh, yeah, but I mean, this is what the company would want. I mean, they would want to build it, get it into production. And this is one of those projects, probably like Pretium, that had a risk factor that companies would want them to get through before it would become an M&A bid, because, the production profile is significant. With Pretium's case, it was resource risk, which took about 3 to 4 years to get over, and then they got rid of their high cost of capital. This one will start with low cost of capital. It'll build this project. It's a refractory gold deposit, so they'll process it there. And once they get going, I think potentially it could become an M&A target, given its location, Idaho, but it would be permitted, and it would have a significant production profile.
Now, US President Donald Trump continues to be busy. He signed executive orders at the end of last week to boost the US nuclear sector, including the development of new reactors, domestic uranium supply chains, and management of nuclear waste and recycling. And of course, investment in the workforce necessary to have an expanded nuclear fleet, all with the aim of reinvigorating the nuclear industrial base of the United States. The first company to directly benefit from this is Anfield Energy, which received approval from the US Department of the Interior for its Velvet Wood uranium project in Utah. Stibnite took 8 years to process. The Bureau of Land Management completed its review of Anfield's project in less than 14 days. Joe, what could go wrong there?
Yeah, I mean, they will complete it. They will be forced to complete it within 14 days. But I have no idea what that looks like, especially when you cut a lot of these employees out. I don't know how many people are there just to do a normal NEPA process, let alone one that's you got to do in 14 days. I mean, the big idea here is that U.S. consumes, 50 million pounds a year of U3O8, and they domestically produce about 1% of that, and sometimes some years none. So this is a project that feeds that idea. But again, with a lot of these critical minerals, the bigger idea or the bigger issue is processing that output into what the actual nuclear power facilities need. Is that processing capacity? Does that exist in the States? That would be the bigger question for me. I mean, because there are a lot of marginal uranium mines that have been around in the U.S. for a while, but the big, if you really want volume, I mean, it's really in the Athabasca Basin in Saskatchewan. But whether the U.S. now under the current administration wants to develop those assets to be used in the States, I don't know if that's as big a push as it was under the Biden administration.
How important for the nuclear and uranium sector is Trump's support?
Huge, absolutely huge. Because, if you were a nuclear power plant, and you were procuring uranium, you would want to make it the lowest cost uranium possible because you don't want to pass on that power, higher cost to your consumers. And so the cheapest stuff is usually the stuff out of Kazakhstan. But if you're forced to buy locally, then you're going to be running around to buy locally because there's not a lot of production, and there might never be enough production in the States to meet the demands of the nuclear power facilities. And I'm not sure how much processing capacity there is to produce as much as what they need, in terms of the facility. There's a lot of steps here. 14 days is maybe enough for the mine, but there's a bigger picture here.
Now, you mentioned Kazakhstan's the biggest producer. Canada's also a big producer of U3O8, which presumably means they have the lowest cost production. And from what you were saying, the potential in the US is for smaller operations, which presumably will have a higher production cost. So I guess one question here is there may be government support to getting permitted, but if the pricing's not there, it doesn't really matter. Will the government step in and do things to help make the projects be economic or be more economic or sufficiently economic?
Yeah, well, that's a big problem with a lot of the critical mineral projects. Is some of these projects can get the capital, but the government and nobody can change the price of the commodity. So a lot of the copper projects that are significant, that require $5 up to $10 billion to build, the copper price isn't incentive enough to get the return, even if they get lower cost of capital upfront money. It's just not there, and the governments will have a harder time trying to change the commodity price. I know, the Trump administration is talking about tariffs on imported copper and that, but still, how long can you maintain that? Because most administrations don't last, for 4 years unless they get a second mandate.
It'll be interesting to see how the Trump administration believes it can fuel a larger US nuclear fleet if it does put tariffs on leading uranium producer Canada, because I imagine that's one of the things Canada will potentially hold as leverage over or with the US to, not have tariffs, or at least moderate tariffs if they exist at all.
Yeah, I mean, I don't know how the states will do it if they do have endowment of a lot of critical minerals, but they don't have the processing capacity to make the end products that industries require to make the cars, the batteries, the what have you. that the critical minerals are required for. There's a step in between that's significant that China owns the technology of and has been advancing that over the last 2 decades. It'll be hard for the U.S. to catch up to that level of technological expertise in a shorter time frame without the actual Chinese helping them, because they'll have to do this themselves.
Well, I think that could be a very short conversation. But if President Trump wants to boost US nuclear energy production, Joe, is it right to think there will be an associated benefit of the copper sector through the need to increase and upgrade transmission and distribution infrastructure?
Yeah, I mean, this infrastructure question about, in the States has been something that's been discussed for about 25 years or more. When I worked as an analyst for Phelps Dodge, they were always talking about, we got to replace this aging infrastructure and blah, blah, blah. Nothing's ever happened. And the longer you wait, it'll be a bigger deal. And it'll also be a boon for copper. But I haven't seen a lot of people talk about aging infrastructure under the current U.S. administration.
Okay, sticking with copper, the US Supreme Court decided this week not to hear an appeal by the Apache Stronghold organization that wants to block the development of the Resolution copper deposit in Arizona, which is a joint venture between Rio Tinto and BHP. Earlier in May, a federal judge temporarily blocked the administration of US President Donald Trump from undertaking a necessary and agreed land swap that includes the Oaks Flat area, which the San Carlos Apache considers a religious site. With the Supreme Court not hearing the case, the injunction should now be lifted. Congress under Barack Obama first authorized the land swap in 2014. 11 years of legal wrangling now appears to be over, Joe. Joe, how important is resolution for the US and meeting its future copper needs?
This would be a very long mine. This mine life, this would be like a 60-year mine life. They say on their website that they could produce about 25% of U.S. copper demand. I mean, in terms of their production levels. The problem is that there's no smelting capacity in the U.S. To actually take on that production, and so if we don't have a coincident increase in smelting capacity, where does this copper concentrate go? Because this is not a solvent extraction situation where they produce cathode, unless they're considering a different sort of flow sheet where they do something like leach that concentrate, through their Rio Tinto Newton technology and produce cathode. That's a possibility. Or they use the isosmelt technology and ultrafine grind the concentrate and leach that and produce cathode, because that would really be what would be required, because that would happen a lot faster than trying to permit a new smelter in the States. But I mean, who knows, that could change. But yeah, this is a significant project that's been around for a long time. And, when I worked as an analyst for Phelps Dodge, we had this project coming in 2010. It's now 2025. So we've been waiting for a while.
Now, this will obviously be an important win for both BHP and Rio. And I want to ask you how important this win is for Rio in particular, within the context that the company is now parting ways with its visionary CEO, Jacob Straussholm, who led the company down the lithium path, but he refused to cut costs. And now there's allegations by officials in Mongolia that Rio participated in bribery and corruption. It seems that it's the perfect time for Rio to get a big win in the copper space, something, back to more its normal business, rather than the lithium and other things that are going on.
Yeah, I mean, this has been a project they've been waiting for a while. I mean, they obviously had good news back in 2014 as well. So we're almost a decade later, and now they've got good news again. I mean, the partners have spent about $2 billion on this project through underground development, building these big, huge shafts, and that without producing a pound of copper. So they're in it. There's no sort of they're willing to go the extra mile and wait this out because of the money they've already invested in this project. I mean, this will create about 1,500 jobs, direct jobs, maybe another 2,200 indirect jobs. So it'll be a boon to Arizona in terms of the economy. and in a time where jobs are harder to come by, especially highly skilled jobs, and the push for manufacturing, which mining is part of, this would feed right into that. But then the question becomes, do they have that skilled labor in the States to actually build this project or operate it? That's another issue, because over the last couple of decades, mining is not an industry that has been, expanding with respect to people coming into it.
Okay, now Resolution was the first project that President Trump put on its list of things that must be developed. It topped the first list there. Finally, the US Treasury will stop making 1-cent coins next year, citing cost and lack of usefulness. Stopping production will generate immediate annual savings of $56 million US. Joe, that coin has been in circulation for more than 2 centuries, but I imagine that with more than $36 trillion of debt, the US Treasury has bigger fish to fry than producing pennies.
Yes, probably. I like fish.
Okay, I'm going to end with a spot quiz for you. The US Treasury says it's going to save $50 million a year by not producing the penny. How much does it cost the US Treasury to make each penny?
It probably costs, I would say, 1.2 cents.
It's about double that, 3.69 cents per coin.
Wow, that's a good return.
Yes, excellent. That's all we have for this week. Joe Mazumdar, thank you very much for joining us today.
Great. Thanks a lot, Paul.
And of course, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.